Thank you very much, Tim. It's certainly my pleasure to present the Neometals story. So, as you said, we are a listed project developer. We've got a clear focus on the EV and energy storage thematics. We've got 4 core projects. One of our key tenets is to build value and then to bring in big partners to commercialize that to give us the optimum return on invested capital. Today I'll go through our pivot away from traditional hard rock mining in the upstream to eco-friendly materials recovery and battery recycling. Essentially, we sort of pivoted a couple of years ago. We could see that we needed not only secure critical mineral supply chains, but we needed to decarbonize them. And so we've invested in process engineering and technology to address a couple of real market needs. One is recycling of these lithium batteries. Another one is materials recovery from byproducts. We've got an excellent team. We obviously developed the Mt Marion Lithium Project, which is now the world's 2nd largest hard rock source of lithium, with a couple of big multi-billion-dollar companies. We transferred our EV into cash. We've got about more than $80 million in cash, no debt. So we've future-proofed our balance sheet, and we can fund those through to FIDs with our partners who are co-funding developments. And we've returned $55 million in dividends in the last 5 years to our partners. Next, please. So sustainability, as I alluded to, we could see that we needed to decarbonize, and the decarbonisation is really driving this ESG, as obviously global warming is driven by carbon. And today I'll tell you about our 2 main European Union focused projects. Next, please. Corporate dashboard, as I said, we've got a fantastic balance sheet, no debt. And a very supportive shareholders base. The board and management are the largest shareholders in the company. Next, please. So I think, if I had to leave you, what commodities are we exposed to? Well, we've got 5 of the top 6. So we get graphite, lithium, cobalt, and nickel out of recycling the lithium batteries at the end of life and from production scrap, and then we're recovering vanadium from the world's highest grade vanadium bearing stockpiles adjacent to some steel plants up in Scandinavia. Next, please. So operationally, we're focused on our 4 main projects. I'll run through the lithium battery recycling that we've got in a 50-50 joint venture with a multi-billion-dollar German engineering group. We're in the construction phase of a demonstration plant there to showcase our technology to the European battery production hub, a vanadium recovery project, and I'll leave you to look at the others online. Next, please. Next. So recycling is not optional. I think, we've got very strong conviction in the growth of these batteries and the number of batteries that have been planned. What we are even more certain about is that they wear out and that you shouldn't stick them in the ground. One, they're not safe to store. If you have them end to end, you can get arcs and there's fire. Shouldn't put them in a landfill because there's some pretty funky base metals and lithium there. They're not all that friendly if they get into the groundwater. Greenhouse gas. So, if we have a look at the internal combustion engine via the EV EVs start way behind on a carbon footprint, and that's because of the batteries. So we need to decarbonize EVs by producing the batteries out of recyclable material. Material shortages, we're focusing in Europe that don't have a massive amount of domestic production, and the circular economy closing that loop. Next, please. So, here's the opportunity. We first got into lithium in 2009. We like to get in early. We like to do the building of the value, de-risking with the drill bit in the test lab, having the permits ready. And when the market's ready for us, we have big partners that can build massive plants. And that's what we'll go into in a bit more. But so what we're seeing is these end-of-life lithium cobalt-type batteries from consumer electronics, phones, laptops. We're getting scrap vehicle production. So when these battery plants start up, 30 to 40% scrap rate, getting down to between 5 and 10 in the long term. And then this massive end of life. Well, there's going to be a tsunami of these batteries coming back. Next, please. And so, you know, if we're really truly going to decarbonize it, and we can see there's about 8 tons of CO2 for every ton of batteries. Now, if we recycle those in the normal smelting route, you halve it. And if you do with hydromet processing, which is what we do, we're almost looking to eliminate the carbon out of the battery material supply chain. Next, please. So our technology, we've developed this over a number of years. So what we do is we can take all sorts of batteries in all formats, different varying states of charge, and we shred them to make them safe to process. We take out the plastics, the steel casings, and the metal foils. That leaves black mass. And this is what the black mass looks like. It's just well, not you can see it all that well, but it's a black powder, and it's carbon, and it's cobalt, nickel, manganese. And so what we do is we digest that in an acid. We solve and extract out the materials, and we can reinsert them back into the supply chain. The carbon won't dissolve in sulfuric acid, so we filter that out and look to put that into more traditional uses. Next, please. And so robust metrics. So we could see that big tsunami, it's going up to millions of tons. Initially, we'll start off with a 20,000 ton plant, but before looking to do a 200,000 ton plant. And that's on the premise that one of these gigafactories will need 20,000 tons of capacity to take the off-spec in production. That's off-spec cathode, failed QA, QC cells and packs. And then we'll have to expand that in sort of 6 or 7 years to catch the other 90%. So very, very robust. Down the bottom end of the cost curves, very quick payback, fantastic IRR. Next, please. And so that's how we were able to get one of Germany's largest engineering groups. SMS has been around for 130 years. They've got 13,500 employees in 95 sites. They are the biggest constructor of processing plants in the world. Now, they're not here to build a 20,000 ton plant. They're here to build multiple 200,000 ton plants. That's the end game. So essentially what we're doing 50-50, we will own the technology and equity in an operating joint venture company called Primobius GmbH. And so what we're doing is putting a demonstration plant first. We'll then look to build our first commercial plant and then scale up to larger ones. And so SMS will build, operate, and procure the debt on a best endeavours basis. They are the second largest generator of German government guaranteed debt for projects. So a real tier one partner for us, and they're essentially the delivery machine for what's been a very successful R&D program done in Australia. Next, please. And so here's what we're going to build. We're going to build this demonstration at Hilkenbach, which is their home or their manufacturing center, to basically allow the cell makers and the car makers to see our big plant. We've done little shredding for them. Now we're going to show them the big plant, and they can take products back and qualify it. And look, you know, Germany really is the hub of battery production into Europe. Next, please. Then we'll move quickly to the Vanadium project. So Vanadium has a number of uses. It predominantly is steel. It's dominated by China and Russia. You know, the Western world runs at a permanent deficit of vanadium units, and we've just been drawing down ad infinitum. And, you know, the Europeans are now starting to get pretty worried about it. You can use it in stationary batteries, VRB. You can also use it in vanadium lithium batteries. Next, please. So what there's in Scandinavia, in Sweden, the national steelmaker has been very, very lucky to have this high grade magnetite that has high grades of vanadium in it. It makes excellent steel. And what happens is the smelting process called a LD furnace turns the vanadium into a calcium bearing vanadium in the slag. And essentially it's the world's highest grade stockpile. It would be 2 or 3 times the grade of any Australian project. There's 2 million tons of this. They're adding to it every year out of three steel mills. A private company called Critical Metals, of which we're the largest shareholder, has secured a 10-year supply agreement. We're farming into a 50-50 incorporated joint venture. Once we finish it, we're funding all the evaluation right up to FID in an eco-friendly process. This will actually have the lowest carbon footprint out of any vanadium in the world. Next, please. And so there's the stockpiles. You're looking at vanadium grades of 3-4%. Our pricing is off an average grade of 3.9% V2O5. I don't need to build a mine. I don't need to build a concentrator. I don't need to build a kiln. I've just got a tiny little plant at the back end, recovering the vanadium and then making the tailings safe. Next, please. And the scoping study results, you know, we put a few hollow logs in there. It's very financially attractive. We aim to make it even better. The key part is the operating costs. You are down at the bottom quartile of the cost curve. Next, please. And essentially how we do it is we take the slag and we dissolve it in a carbonic acid. We actually take CO2. We'll take 80 to 90,000 tons of CO2 out of the atmosphere for the leaching, and we will render the tails as a carbonate. So we'll actually be sequestering carbon at the same time as being down the bottom of the cost curve. Now, if that's not a sustainable competitive advantage, I don't know what is. Next, please. Our forward work program, we're in a class 4 feasibility study stage at the moment. We'll then finish a class 3 or a BFS, make an FID, actually purchase the highest grade slag, and then start construction. Next, please. And this is actually the most important part of the asset is the people. We've got a fantastic board with all sorts of skills. And in terms of the executive team, you know, I couldn't be happier with the skills that we've managed to build up within the company. And that'll stand us in good stead going forward. Next, please. So I guess in summary, you know, as Tim said, you know, we've got a market cap of about 100 mil, 95 mil. We've got about 80 something million in cash and shares. You know, what we're looking to do is take away the traditional mining risk. We've got a fantastic board. We've got a consistent strategy to take risk out of the business and to maximize our return on invested capital. You know, it's really SG friendly, domestic, ethical supply chains, you know, decarbonising critical material supply, particularly in Europe. We've got multiple catalysts across our portfolio with 5 projects, and we've got a history of making money and sharing it back with our shareholders. And, you know, a lot of companies pay license to ESG. We have actually fundamentally over the last 3 or 4 years changed our business away from upstream into more sustainable processing. Thank you.
Thanks, Chris. It's a very interesting space. I mean, the first question is, you've got about 80 or 90 million dollars in cash and a market cap of around 100 million.
Yeah.
Why is the market kind of undervaluing your business?
Well, you know, I think when you have 4 projects that are in the final stages of evaluation, you know, if you have a look more at a traditional mining, you know, a lot of exploration, not that many get to resources or reserves or studies, whereas our 4 key projects are in, you know, and well and truly 3 of them are in the final feasibility and demonstration plant phase, which is beyond the feasibility stage. And so there is a spend. We're still maintaining our dividend policy, and which is sort of returning, you know, capital prudently where we can. But we do have a few investment decisions on the horizon, you know, one towards the end of 21, then 22, 23. But, you know, having that much cash, you know, we have the ability to demerge those as they get into, you know, the investment decisions so that we don't have to dilute one project for the other. We've got absolute flexibility, and that will become evident in time. And I guess, you know, they're saying, well, until you've made an FID and can show us your cash, Chris, you know, I'll give you an EV equivalent to what I think you're going to spend on the projects in the next 12 or 18 months.
And you originally started your career in kind of gold and lithium. Why have you kind of moved into this space?
Yeah, look, that's right. Historically, the family's been in gold mining for sort of 4 generations. And I think, you know, it was a move in terms of diversification and then finding something that would move counter to gold. You got to remember when we started the company, which was sort of 17, 18 years ago. And so at various times that's worked for us. Then everything ran at once when, you know, the market was going silly and China was going silly. And, you know, we went into lithium because we knew the asset. We'd previously owned ground adjoining it. We knew what it could be. We went in early. We got big partners to develop that. And, you know, we made about $200 million off of a $3 million investment. And, you know, we missed out on the first wave of lithium in 09-10. We made, we were the first ones in 2015 and really showed, how well we bought the second major global operation, and then there've been some other subsequent ones. And so, I think we understood in the value chain where you make money. We were making too much money in spodumene at prices above 1,000. We knew that couldn't last. So we decided to get out, and we worked out that the supply chain will normalize, and we wanted to be up the other end because we understood that we could make more money at that end.
Kristen, just one last question. A good question, actually. Feasibility studies, by their very nature, have inherent risks that the project's not feasible, obviously. Would you highlight some of the risks that for your projects not going ahead? Like what can go wrong?
So for the lithium battery recycling, we did a year-long pilot plant up in Canada. And we do, we increase the scales of the test work. We follow them with detailed engineering studies. They've got to be robust. We know things go wrong. We put hollow logs. We take conservative assumptions, and I guess that's about all you can do in terms of the commodities. The only long-term defensible strategy is to be down the bottom end of the cost curve. Certainly with the lithium battery recycling and the vanadium slag opportunity, they will be lowest quartile cost producers, and it doesn't really matter what the price forecasts are. Suffice to say that we are bullish on where cobalt and nickel will head in the back half of this decade when the volume and the tsunami of batteries for recycling really hit.